Hey guys, my name is Ruben Dante, and in today's video, I'm gonna go over my morning market routine to figure out if I'm gonna buy or sell for the day, especially options, but it applies to anything futures, forex, equities. Pretty much, I'm gonna go over my watch list and how I know if I'm gonna be buying or selling options with market volatility before the market even opens, and making my process that much easier and smoother to just get into a position and know exactly what I'm looking for and what I'm looking at, and a super simple way to tell if options are inflated or not, if they're expensive or not, meaning I will know right away if I'm going to be buying or selling options without using 10,001 indicators and rules or screeners. I know a lot of people like to have the Venus and the moon and Jupiter and everything line up to figure out if they're going to be buying or selling an option. So I'm going to show you guys how to do that very, very quickly, literally in a couple of seconds. So without further ado, this is Think or Swim. So we're looking here. The first thing I'm always going to be looking at is what the futures did overnight, because the futures are always going to be a very good indicator of how the market will open. If the NQ futures are free falling, it's safe to say that, we're probably going to look for, demand areas on a pullback, and so on and so forth. So here I have the VIX, the overnight indexes, and my favorite stocks. I've always been a big proponent of trading, sticking even, within the context of your rules, whether it's supply and demand or whatever kind of strategy, how those rules and the context of those rules, how they apply to, the tech stocks versus, the index versus stocks and all of that. So I mostly look at the tech sector and I know what I'm looking for in the tech sector. So I'm going to go ahead and let's just say go with, let's go with Apple. So I'm going to go to trade, excuse me. And you guys know I like to chain and link these together. So I'm going to always go 3 months out to see kind of what my break even is and if it's something that I'm willing to control. So my general rule of thumb is if I go to current price and I go 3 months or so out. So if current price for Apple is currently 183, or no, I'm sorry. If it is 189, excuse me. So then 190 call cost at the moment just about $5.65. So then I ask myself, where does that break even leave me? And if that leaves me at just around target, then I know it's probably pretty inflated. And so if my target is 196, which is above even the highest up until this point, then the probability of that becoming profitable is not very high, since my break even for that will be just around target. So pretty simple. If buying the call at current price 3 months out has me at or near target as the break even, then I'm probably going to be selling. Things are probably inflated. So now the market just opened. Again, it varies, kind of my rules vary by sector, so it's just a very general rule of thumb overview. You guys have your own parameters. So now that the market opened, I know that I'm looking to sell options and I might be looking for demand. So the first thing I'm gonna do is go to percentage change and look at pretty much the biggest movers. So Netflix has fallen 13% and is down $52. So I'm gonna go ahead and click on that. And I like to draw my supply and demand zones in the morning. Because, or not in the morning, excuse me, on Sundays, because I don't want to be scrambling trying to figure out if I'm going to be buying or selling or at what area. I don't want to be drawing my zones essentially once I'm looking at getting into the trade. I want to be prepared, especially for the long time frame trades, so that I know now that I had drawn this previously, and I know that this is an area where I want to control Netflix. I know the prices are inflated, so I know that I'm going to sell and I want to control it, and I'm long, so I'm probably going to be sell a bull put. So with that being said, I'm going to look at my target. I know kind of where I want to capture that gain. So for me, there's going to be an intraday trade, even for options. So I don't want to hold it overnight. So I'm just going to go ahead and do a bull put. And I always like to cover myself in case of like a bankruptcy or something really crazy happens. Obviously, I also have the stop loss for a trade like this. Okay, so I am back and it is now 12:36 p.m. same day. We're gonna go ahead and close the trade. So I'm gonna go ahead and buy it a close. So I'm gonna go ahead and click left click on and then create closing order. We're gonna buy it to close because we sold the vertical put to open. So I wanna buy it to close to the lowest possible price, confirm and send. As you can see, our P&L for the day was $2,434. So that is pretty much a day of my start to finish, how I look for the trade, open it, buy it, close the trade for the day. So I hope this video was helpful. Side note, I got this shirt from Bulls and Bears Radio. Not sponsored, but I thought it was really, really comfortable and really nice of them. So thank you guys for that. So anyway, guys, happy trading. Have a great rest of your day. If you like this video, like, comment, subscribe, click the bell button if you want to know notifications for my next video, and I'll see you guys next time.